All right, let's talk about HIMS and HERS. This is one of those companies that, wow, it really gets people fired up. You've got the bulls on one side, the bears on the other, and they are just miles apart. So in this explainer, we're going to dig in and figure out what the heck is going on.
And let's not beat around the bush. The stock has had an absolutely brutal run. I mean, look at this, down over 45% in the last year. That's not just a little dip. That is the market practically shouting that it has serious doubts.
Okay, so here's where it gets really interesting. Despite that massive drop, you have some serious analysts out there saying this thing could have an 80% upside. So what gives? What on earth are they seeing that pretty much everyone else seems to be missing?
Well, the answer, it seems, lies in a completely different story. A story that, frankly, the market might be ignoring completely. We're talking about a narrative that goes way beyond the day-to-day noise.
And that right there brings us to the heart of the matter, what we're calling the HIMS valuation puzzle. I mean, how do you even begin to put a price on a company that looks like one thing, but might actually be something completely different under the hood?
It's really two completely different worlds, right? On one hand, the market sees a company selling trendy weight loss drugs, super risky, super volatile, but the bulls, they see something else entirely. They see a global healthcare platform that's all about growing its subscriber base for the long haul. They see what they call an asymmetric opportunity, and that's the key idea we really need to get our heads around.
So let's start with the common view, okay? The one that's been hammering the stock. And yeah, it's pretty much all about those GLP-1 drugs.
Yeah, for most people, the HIMS story starts and ends with one thing: weight loss drugs. You know the ones. And look, you can see why, right? The market is huge, the media hype is just constant, but it also comes with a whole lot of drama, and most of the conversation just gets stuck on stuff like drug margins and short-term profits. And believe me, the chaos is very real. I mean, just look at this whole soap opera with Novo Nordisk, the company that makes Wegovy. First, they announce a partnership. Great. Then Novo Nordisk turns around and sues HIMS. And then they renew the partnership. It's just wild. And that kind of whiplash is exactly what makes investors so nervous. And what's the result of all that drama and uncertainty? Well, you get this: a short interest of around 32%. So what does that actually mean? It means for nearly a third of all the shares out there, people are literally betting money that the price is going to go down. That's a huge vote of no confidence from the market. Okay, so that's the bear case. But now, let's flip the script completely and look at what the bulls are saying. And you gotta buckle up for this one, because their thesis is that HIMS is secretly building the Amazon of healthcare. Just let this idea sink in for a second, because it changes everything. The drugs are the books. The platform is Amazon. You see, suddenly, HIMS isn't a company that just sells drugs anymore. It's a tech company. It's a distribution network. So here's the absolute core of the bull argument. HIMS isn't really a drug company. It's a global healthcare distribution network. The whole idea is that they're using these popular products to pull in a massive audience of customers, kind of like how Meta and Robinhood did it. And once you have that audience, you can sell them a lot more stuff over the long term. The drugs, they're just the hook. Now that is a really bold claim. So talk is cheap, right? Let's actually look at the numbers and see if they're really building this thing. So the bulls will tell you the one metric that nobody is paying attention to is subscribers. Now look, when you first glance at this, you might think, that year-over-year growth is slowing down, but trust me, there is a much deeper story happening with these numbers. See, what's happening is a strategic shift from quantity to quality. They're not just trying to get anyone to sign up. They want stickier, higher-value subscribers that they can then cross-sell to. And here's the proof. The number of subscribers who use HIMS for more than one condition, that group is growing by over 80%. That tells a completely different story about the health of this business. And get this isn't just a US thing. While everyone was obsessed with the weight loss drug drama, HIMS was quietly going on a global shopping spree. They've been snapping up companies in Europe, Australia, Japan, Canada, basically building out this incredible international footprint. It's like they pulled off a massive land grab while no one was watching. And you can see the platform scaling up in the financials. I mean, revenue is expected to blow past $2.3 billion in 2025. But here's the kicker. Even while their margins on some of these drugs are getting tighter, their adjusted EBITDA, which is basically a good way to look at their cash flow, is absolutely soaring. It's set to almost double. That's called operating leverage, and it's a huge deal. It means the business is getting way more efficient as it gets bigger.
And this right here is where the platform idea gets really exciting for the bulls. They've got the customers, they've got the global network, so now they can just start adding on new services. They've already rolled out heart health and hormone therapy, but they're already hinting at huge new markets for 2026, We're talking menopause, maybe even Medicare. And it's all going to be powered by their personalization AI, which they call MedMatch.
So when you put it all together, what does it mean if you're looking at this as an investment? Well, it creates what Wall Street calls an asymmetric bet.
Basically, the folks who hate the stock think it could fall to somewhere around $8 or $12. But the bulls, they think it could rocket up to $60, maybe even $80. That's asymmetry right there. The potential reward, if they're right about this platform idea, is just so much bigger than the potential risk.
But, and this is a big but, let's be perfectly clear, this is no slam dunk. There are some very real, very serious risks here. That relationship with Novo Nordisk is shaky at best. Trying to stitch together all these global companies they bought is a gigantic headache waiting to happen. And frankly, this whole idea of cross-selling complicated healthcare products, nobody's ever really proven it can be done on this scale.
And that leaves us with the billion-dollar question, doesn't it? Is HIMS actually building the Amazon of healthcare? This game-changing platform that's going to totally reshape how we get our medicine? Or is it just a house of cards? A company that's bitten off more than it can chew and is destined to become a melting ice cube? Honestly, the answer to that question is going to be one of the most fascinating business stories to watch